So let's start with Kingston Wharves because they have purchased 27% of cargo handlers. And most people are probably familiar with Kingston Wharves, but maybe not so much cargo handlers. So what does that company do?
So I believe the term is stevedoring. I am not a logistics person, so please don't, prosecute me or what we would call execute me for mispronouncing the word. But basically, they handle the movement of cargo and other goods on and off ships. So when you go to the wharf, there are different players involved in the process, right? So you might have a company like a cargo handlers that moves the product on and off the ship. You have the potentially the port operator. You have the actual owner of the facility. So there are different players in the whole structure. So in the case of cargo handlers, it was really a spin-off of Montego Port Limited. So Anthony Keith Hart, and some other individuals, were the founders of the Montego port down in Montego Bay back in the 1960s or 70s, I believe. And when they sold the business to Prudential Corporation, they did not want to have a stevedoring business, you know, going forward. So they decided to just really take over that venture and, work through that process. So then Madame Morris and a couple other major shipping related firms or logistics firms, they actually work with cargo handlers. And cargo handlers, has expanded their business into different segments. So they also own a 30% stake in Buying House Cement Limited. That is a cement importer, based at Import Cement, its parent company in the Domrep called Domisem. Cargo handlers, has a lot of cash, put most of it into short-term investment securities. So pretty small business on one hand, but relatively efficient based on the cash generation, low debt, and the relatively standardized and simple business model. So what we would have seen is the sale of shares, to Kingston Wharves for $1.1 billion. And in the release that, was listed at the JSC website for some reason, it was mentioned that one of the company's founders or co-founders, is at a retirement-like stage. And as part of this succession plan, the sale of the shares to a partner that's willing to support the business was, announced.
And cargo handlers is listed on the Jamaica Stock Exchange as well.
The junior market in particular.
Okay, so how does this deal affect shareholders of both companies?
So, from one perspective, the disclosure that came out also mentioned the fact that one, cargo handlers has been given the option to acquire another 13% stake in cargo handlers in the future, take its interest to 40%. That stake would come from the sale of shares by Anthony Marquardt, the same Marquardt rates the CPJ. So Kingston Wharves eventually can increase their interest to 40% in this business. And Jeffrey Hall and a couple other directors from Kingston Wharves are going to be joining the board of cargo handlers. So you're going to see more oversight and what I'd call guidance from the Kingston Wharves team as they seek to expand their business. Because one thing we should also note is that Kingston Wharves has outlined a $100 million US plan of investments over the next 5 to 10 years, I believe. I know one of the things that they plan to do is build out a logistics facility in the west part of the island, which is in the vicinity of like Montego Bay and the Grenadines region. And that region, I am not sure where that's going to be, but Kingston has a focus on going west. So it's going to be interesting to see how they integrate cargo handlers, into their overall framework and optimize value even further. Then so that's for the cargo handler side. For Kingston Wharves, they will be accounting for cargo handlers now as an associate company. So just to keep that simple in terms of accounting, let us say cargo handlers has $100 in net profit. Kingston Wharves will record $27 on its income statement as share of profit. So just very simple accounting. And the
There,
reason why,
mhm.
go ahead, Kalila.
Yeah, I was going to say there do seem to be natural synergies between these two companies, but what impact will it have on Jamaica's overall logistics landscape?
To be honest, most of Jamaica's logistics is relatively private and consolidated amongst a few players. You know, the great, I can't remember his first name, Sir Harry. He was one of the former directors of Main Event. You know, may his soul rest in peace. He, was affiliated with Lanman and Morris. I think he was the main owner. That's just one player. You have SAJE, you have Kingston Freeport. You just have different players, and you don't tend to see a lot of movement in ownership or consolidation in that sense. So I don't expect to see any significant shift in the landscape, but where it is an advantage for Kingston Wharves is that they have their own stevedoring operations at their own location in Kingston. So this gives them an expansionary route into the west without starting from scratch. Then what I was also going to point out was this whole process, in terms of cargo handlers selling its interest, well, its shareholders selling their interest in cargo handlers to Kingston Wharves is one of the beautiful things about the junior market that we don't discuss enough about. So, let's go quick tangent. When CFF listed, the founders were bought out by Derman Trading. Derman owns 65% of Caribbean Flavors and Fragrances now. We saw the purchase of Key Insurance by Grace Kennedy. We saw a disclosure on the JSC yesterday that GK Financial Group should own 98.9% of Key after this takeover bid is completed. We saw AS Bradden acquiring CPJ. It's an Nigerian market originally. We've seen the acquisition of T-Tech by Simply Secure. And we've seen Mayberry, still is taking Access Financial to Proven Management is taking Access, Grace Kennedy buying into Spirit Tree. So if you actually take a look at it and look at the transactions that have taken place over the last decade, almost 2 decades on the junior market, you would tend to appreciate a little better that a lot of companies that, were growing or at the peak of their success, have found a route to, I shouldn't say monetize their interest, but create better succession for the growth of their business. So right now, Cargo Handlers, has indicated that our director can sell under 13% to Kingston Wharves, and they become the largest individual shareholder. We've seen, the Key Insurance deal, and there are just so many different transactions that take place as time progresses, as companies say, hey, I need to, step aside and let someone else run the business, sell to a partner that can scale the business, and they might retain an interest and benefit. Because there have been other junior market companies where international interests out of Trinidad and other regional markets have approached junior market companies on the JSC seeking to buy a large stake to get a footprint in Jamaica. So just like how Kingston has acquired the stake in Cargo Handlers to expand to West, this is just what I'd call one of the numerous transactions that they're going to see going forward in terms of junior market synergies between different listed companies.
Have we seen any changes in the stock price of either company since this move was announced?
So when the transaction took place, it was at $9.70, I believe, and Cargo Handlers traded at around $10, $10.30, but Cargo Handlers is a relatively thinly traded stock for the most part. You don't tend to see as much activity. For Kingston Wharves, it's still trading between the $29 to $32 region. Pretty far from I think it was $70 or $81 that Kingston was trading a couple of years ago. So Kingston Wharves, still growing, but the price, has not gone back to those record peaks from a couple of years ago.